Tulip mania, the first financial bubble that changed how we understand speculation. But before we get started, make sure to like this video and subscribe to the channel so you don't miss any new contents. In the early 1600s, the Dutch Republic was one of the richest and most advanced economies in the world. Trade flourished, art thrived, and merchants accumulated unprecedented wealth. During this golden age, an unexpected object became the center of one of history's most fascinating financial bubbles, the tulip. Tulips were not native to the Netherlands. They were first introduced to Europe from the Ottoman Empire in the late 1500s. Their vibrant colors and rare patterns quickly captured the imagination of wealthy collectors. Among the most prized varieties were tulips with flame-like streaks and dramatic color contrasts caused by a mosaic virus that altered the petals. These rare flowers were unlike anything Europe had seen before. At first, tulips were simply a luxury item for botanists and aristocrats. But as demand increased, something unusual began to happen. Tulips slowly transformed from a beautiful flower into a financial asset. By the 1630s, bulbs were being bought and sold not only by gardeners, but also by merchants, craftsmen, and speculators. Markets developed where people traded contracts for bulbs that had not even been harvested yet. These early futures-like agreements allowed traders to speculate on the future price of tulips without ever touching the flowers themselves. Prices began to rise at astonishing speed. Certain rare bulbs were selling for sums that rivaled the price of houses in Amsterdam. Historical records show that some tulip varieties, such as the famous Semper August, reached values equivalent to tens of thousands of modern dollars. As prices climbed, more people rushed into the market. The opportunity seemed irresistible. Ordinary citizens who had never traded assets before began speculating in tulip contracts, hoping to sell them later at even higher prices. What drove this frenzy was not the practical value of tulips. It was the belief that prices would continue rising because others were willing to pay more tomorrow. The market became driven by psychology rather than fundamentals. This dynamic created the perfect conditions for a financial bubble. In early 1637, confidence suddenly collapsed. At a routine bulb auction in the city of Haarlem, buyers failed to appear. Without new buyers entering the market, the entire system began to unravel. Within days, prices crashed dramatically. Contracts that had once represented enormous wealth became nearly worthless. Many traders who had expected quick profits were left with obligations they could not fulfill. Although the broader Dutch economy survived, the tulip market completely collapsed. The episode became one of the earliest documented examples of speculative mania. Today, tulip mania is often cited when discussing modern financial bubbles. From stock market surges to cryptocurrency booms, the same patterns frequently appear. Rapid price increases, widespread public excitement, speculative trading, and the belief that prices can only go up. The lesson from tulip mania is not that speculation itself is new. Humans have always been drawn to opportunities that promise quick wealth. What changes are the assets being traded. In the 17th century, it was tulips. In later centuries, it became railroad stocks, real estate, technology companies, and digital currencies. The deeper lesson is about psychology. Markets are not driven purely by numbers and logic. They're shaped by fear, greed, and collective belief. Tulip mania reminds us that whenever prices rise far beyond an asset's real value, speculation can turn a simple opportunity into a dangerous bubble. And when confidence disappears, even the most beautiful market can wilt overnight.